You just got a 1099 in the mail, maybe from a side gig, some freelance work, or a job that didn't feel like a real job. And now you're wondering, do I owe money on this? Yes, and probably more than you think. I've worked in accounting for 20 years. In the next 8 minutes, I'm going to explain the real difference between a W-2 and a 1099 and exactly what it means for your taxes. Quick version first. W-2 means you're an employee. Your employer withholds taxes from every paycheck, federal, state, Social Security, Medicare. At the end of the year, the W-2 is just the summary of what happened. 1099 means you're a contractor or freelancer. Your client pays you the full amount, zero taxes withheld. The tax responsibility is entirely yours. That's the core difference. But what most people don't realize is how much that matters. Let me show you. When you're a W-2 employee, FICA taxes, Social Security, and Medicare are split. You pay 7.65%. Your employer pays 7.65%. When you're a 1099 contractor, you're both the employee and the employer. You pay the full 15.3%. That's called the self-employment tax, and it catches almost everyone off guard the first time. Real numbers. Say you made $10,000 freelancing this year. Self-employment tax, about $1,414. Federal income tax on top, about $2,200. Total tax bill, around $3,600. On $10,000, more than a third of it goes to taxes. The move. Every time you get a 1099 payment, immediately transfer 25 to 30% into a separate savings account. Label it tax fund. Don't touch it. That money belongs to the IRS. You're just holding it. Here's the good news. 1099 workers get access to deductions W-2 employees don't. Business expenses, phone, laptop, software, home office. If you spend it to earn money, it may be deductible. The QBI deduction, that's qualified business income, up to 20% of your net business income. Most people have never heard of this. Health insurance premiums. If you're self-employed and paying your own premiums, 100% deductible. And SEPIRA or Solo 401k. Retirement accounts with much higher contribution limits. And contributions lower your taxable income today. The catch, you have to know these exist and actually use them. Keep a simple folder, digital or physical, for receipts and expenses. You'll thank yourself in April. Super common situation, W-2 day job, 1099 side hustle. Here's what happens. The IRS doesn't care how you got the money. It all goes on the same return. Your W-2 income on one line, your side hustle through Schedule C. Two things to watch. Your W-2 withholding won't cover the 1099 taxes. Your employer only withholds based on your salary. Your side income arrives untouched. You need to either make quarterly estimated payments, due April 15th, June 16th, September 15th, and January 15th, or increase your W for withholding at your main job to cover the gap. Your side hustle deductions still apply. Even if it's secondary income, you still get the business expense write-offs. Use them. Here's what to do right now. If you have 1099 income, even just a side gig, first, open a separate savings account today. Call it your tax fund. Put 25 to 30% of every payment in. Second, mark these dates, April 15th, June 16th, September 15th in your calendar. Those are your quarterly estimated tax deadlines. Third, start a folder for receipts, anything you spent to do the work. If you're only W-2, you're in good shape. Just make sure your withholding is dialed in. Link to the IRS withholding estimator is in the description. Like and subscribe for more of this. Next video, I'm breaking down why people owe the IRS at the end of the year and exactly how to stop it from happening to you. See you there.